Hey, what's up? We are back on another episode of the CEO Pulse podcast. We have Josh Lindsey with us. He's the managing partner at American Business Brokers. And check this out. He's got 10 plus years of experience selling small businesses. We get a lot of questions as to how much is my business worth? And then we start creating numbers sometimes. And we have this, swayed idea of what the reality of the value is, right, in business a lot of times. And if you come across the idea of selling the business, this is definitely one episode that you don't want to miss, all right? He sold over $130 million in small businesses in the past. So I'm very, very excited to have him here and then just, pick his brain and all kinds of stuff in terms of business valuations and strategy. So Josh, thank you so much, man. I appreciate you being here.
Yeah, thanks for having me, Rafael.
Yeah. So give me a little bit of context, a little bit of background on you. How did you get started and became the managing partner in a business that sells businesses?
Yeah, no, that's a good question. I actually get that a lot. People are curious how I fell into this. My route is a little bit different than most, meaning I actually started out working in companies. I took my first company public in 2006. It was the financial services sector. We did prepaid debit cards and ATMs. We had about 35,000 ATMs in the Western United States. I was really just the sales guy. I was young, they'd kick me out on the road. I was making all the sales, et cetera. And I had two more experienced partners that obviously were instrumental in that. I did a 2-year stint in the public realm, then got back into kind of small business and entrepreneurship. And along the way, I was buying and selling businesses of my own, kind of entering and exiting and building up value and obviously making money. And I was getting friends and family asking me, how are you doing this? Or can you help me with my business, et cetera? Or where are you finding the money on how to do these deals? And so I've got two companies. I've got a private equity arm. We still invest and we're fairly active in the market. But then American Business Brokers kind of spawned out of that. The reason being is I saw that there was a huge need in the market for proper representation, right?
Yeah.
A lot of people that are business brokers, they were selling cars, and then they decided to sell businesses, or they were selling real estate or insurance, and then they started to sell businesses. And so what I mean by proper representation is I've done it with my own money. I've gotten successfully out. Like I know the ins and outs of what it's like to be a buyer and a seller. So when we started American Business Brokers in 2011, there wasn't really a learning curve, and we kind of hit the ground running. And because I had already been doing it, if that makes sense.
Yeah, I think it's important to make a note of that too. It's sometimes, we come into, we almost automatically give that, other person, like if they have a license, right, you almost automatically give them the credibility. But a lot of times, like a lot of these people haven't owned their own stuff. They just, they're doing the transaction and whatnot. And it's different when you know what it takes, the emotional buy-in that people have whenever there's, a business involved, something that they built, especially like bootstrap type of businesses where you build it from the ground up and then you get to a point where you sell it. I sold a business in 2000. Last one I sold was in 2015, and man, it was like, like parting ways with a baby. You know what I mean? Sure. Yeah. So there's a lot involved, right, on the understanding, side of things, but also on the strategy to make it a viable sale.
Sure.
Yeah. So that's really one of the things that I want to break into. It's valuations. How do you figure out exactly what a business is worth?
Yeah, so that's a great question. I'd say the first thing to be mindful of is if anybody just says, hey, you attach a multiple to your earnings, guarantee they don't know what they're talking about. Here's why. 10 Subways.
I've heard that, by the way. I
know you have, because I hear it all the time. Somebody comes to me and says, well, a guy in my neighborhood told me it's four times, your gross earnings. It's like, well, who's the guy in your neighborhood? What does he do? Oh, well, he's a really successful orthopedic surgeon. It's like, what? He doesn't know what he's talking about. And here's what I mean by that. If I've got, let's say you own 10 Subway franchises. Okay. It's a franchise, they're sandwich shops. You own 10 of them. Why should that be valued the same way as a tech company with IP, patents, and long-term billing contracts? They're not even the same thing. You've got food, you've got franchise, right? And then you've got tech with patents, IP, and billable contracts that cast out a year, 2 years, maybe even more.
Longevity, yeah.
They're not even in the same like wheelhouse of businesses, yet inexperienced people will say, oh, you just attach a multiple to the revenue and that's how you sell it. No, that's not how you sell it. And I can tell you, if you take it to market like that, one, you're going to be either way overpriced or you're going to be underpriced. And two, when you start talking to, savvy buyers, investors, lawyers, CPAs, anything like this, if you can't back up your valuation, like you've probably seen on Shark Tank before, how did you come up with the valuation?
Yeah.
You're out the door. You're done. Like they won't even deal with you because they can just tell you have no idea how you came up with your number. Does that make sense?
Yeah, no, it does. And it's interesting that you say that, because I mean, I've heard that advice before. You add 3 times whatever the revenue is, and that's going to be a ballpark of but it makes sense, right? If you have a couple of different industries, and then you have longevity in the contracts, you have accounts receivable to go on for months or years, because it's a standing contract, that should be worth different than whatever is day-to-day sales.
So the quick and simple answer on valuations are, you've got to, there's a couple components. One, you got to look at the financials. Okay. And let me spend a minute and just talk about financials for a second. So I know for a fact that internet businesses, online businesses, right? People have these, they are far more profitable as far as margin goes than say a medical distribution company. So I see lots of online businesses that'll make as much as 40-50% net for the owner. That guy's doing $1 million in sales online. He could be making 400-500 grand, right? Big margins on internet businesses.
Yeah.
I know in the medical field, there's a lot of medical device companies that their margins are like 10%, maybe 12, 13%. Does that make sense?
Yep.
So if that company's doing $1 million and they're only making $120,000 in profit, there's a big difference right there just in the numbers and the profitability. And the reason that the profitability, the owner profit is important is because that's what banks and investors and lenders, that's what they're looking at as far as ROI. How much cash flow is there to service debt, to pay yourself, to grow, etc. So it's not just as simple, like I said, as throwing the multiple on the numbers. You got to dig into the numbers first. The second thing that I was kind of emphasizing was industry, right? Subways are not going to be valued like tech companies, nor is a tech company going to be valued like a mechanic shop. You've got to do some industry research and find out what that industry is all about. What are the risks? What are the rewards, etc. And what are the comps in that space to what businesses are selling for? Unlike real estate, where you guys have your, is it 1 or 2 mile radius usual?
I usually stick to about a 1 mile radius.
Yeah, so let's say 1 mile radius within 1,000 square feet. Comps got to be relatively recent, right? Like within the last year. That's how you're getting your comps. Well, businesses, it can be nationwide. You don't have to be centrally local. I can pull a comp from New Jersey, but you're going to have to do some work to go out and find those sales. Does that make sense?
Yeah.
Again, no different than real estate, where you're going to need to validate your industry research and value and then attach it to the numbers, right? And then the third thing that we do is we do a risk analysis as part of our appraisals. Risk analysis is the same. There's about 25 questions where we analyze the company and it gets a different multiple based on the question. For example, how much debt do you need to have in this type of business? And what I mean by that is the cost of equipment a really high barrier of entry? If you're in commercial construction, you might have to have $1 million, $2 million in equipment on the balance sheet to like break into excavation. Does that make sense? Whereas an internet business, you could probably launch that thing, with $10,000, $15,000 worth of product, no big deal, throw a website up and you're doing whatever you're doing. So there's 25 questions like that where we're analyzing risk and barrier of entry and what's the lendability. Like weed businesses right now, marijuana, you can't get bank funding on those. So it's going to get a really low multiple. Doesn't mean it's not a sellable business, but again, risk factors. Those are the 3 main areas that we can target. You got financials. You've got your industry research. Yeah, your industry research and comps. And then you've got your risk analysis that we do on the business. That's what kicks out a solid appraisal with 4 different evaluations that'll stand up against any private equity firm, family office, investor. I don't care who it is, their lawyer. You'll be able to validate your numbers.
Yeah, that's a lot more to it than just the adding the multiple thing.
There it is.
And that's actually advice that I got from an agent that I went to when I wanted to sell my transportation business.
What kind of agent?
It was a real estate agent who was doing business sales as well. But the thing is, for example, I didn't know, right? Like I had no idea how to sell a business.
Right.
I've been in the business and building that thing up for the last 8 years. However, like I didn't know how to sell it. My exit strategy wasn't, I don't know what I was doing. So I ended up moving it and got lucky and did well. But yeah, I mean, I got a weird, a few weird pieces of advice as I was going through the process. Let me ask you, when it comes to financials, you were talking about the margins, 10, 15%. What's an average, I guess, healthy margin for a business?
Okay. Now again,
and I know that may be a loaded question, so feel free to elaborate.
Yeah, just because every industry is going to be different. Like I just said with medical, I've sold some really, really successful medical distribution companies.
Mm-hmm.
Their margins are like in the teens. That doesn't mean they're not healthy and successful. It just means in that space, the margins are not as big. Mm-hmm. You make your money on volume. They're doing tens of millions of dollars a year, right?
Yeah.
But for the most part, most small businesses will operate somewhere between 20 and 30%. So of your gross. So if you're doing $1 million a year in sales,
mm-hmm.
the owner should be making somewhere between $200,000 and $300,000 personally. And when I say that, that's after you add back stuff, right? Like their tax return's not going to show that they're making 300 grand. They're going to have their depreciation and all that stuff to power it down.
Yeah.
When I get into that appraisal and I add all those owner benefits back, you should probably be somewhere between 20 and 30%. Most small businesses hover right around there.
20 and 30%. Okay, cool. Yeah, I mean that's kind of like the idea that I had somewhere on the 25 mark. And you're completely right. I mean, certain models have, for example, my brokerage has we're around there when it comes to margins, and then on the wholesaling fix and flip business, it's a lot higher. On the digital side and the coaching side that I have, that's way higher.
Yeah.
So every industry is different, right? Yeah. No, it's very interesting. Now, one thing that caught me, was I thought I was gonna, put a business out there and then just kind of have people come in and then buy like a house, right? But there was a lot of negotiation stuff that I didn't understand, and how can people best approach or get prepared if somebody's looking at selling what they've built for the last decade, in terms of negotiation? What's the best thing that they can start doing to get prepared for that?
Well, look, I believe firmly this is why I'm so busy in my business, because hiring an expert, it pays dividends.
Yeah, 100%.
It really does. And I don't know a lot of people, and no offense to whoever sold your business, but I don't know a lot of people that just specialize in what I do. I don't sell houses. I'm not dabbling in real estate as well. This is it. All I do is sell businesses. I sell somewhere between $15 and $30 million in small businesses per year. Mm-hmm. That's what I do. And so when someone is preparing to sell their business, obviously, like you said, it's like their baby. They put so much time and work into it. They built something up. They're way attached to it. I don't know why you'd want to take a big risk of just kind of throwing it out there on the market and seeing what happens, right? Most of my clients either have two motivations. One is they want to sell and they want to sell quickly. And the first advice that I would give them, and if you want to be out, let's say in 90 days, 120 days, price is a big factor to get offers quickly. Meaning if your business is worth $3 million, if you price that at $2.6 million, you're going to have people chasing it down real fast, offers, and you're going to sell.
Yeah.
But most of my clients want top dollar. They've put in so much work. They've spent so much time. They're looking to exit, transition, retire, whatever it may be. And so they want a premium. Well, in order to get a premium, you probably need to hire a premium guy to go out and get you that number, because it's just not that easy to find that one buyer who's willing to pay top dollar and write that check. And so that's really where I spend most of my time. And getting listings is easy. I work off referral only. And closing deals is easy, but in the middle, it's pushing those buyers to help them understand why they should be paying full price, talking to that buyer's lawyer, CPA, going through the financials. You're pushing that envelope so that your client's getting an extra 100 or 200 grand.
Yeah.
On the deal. Does that make sense?
Yeah, absolutely. I think it's one of the things that, they're often overlooked, right? The fee or the cost, quote unquote, it's not really, I mean, if you have somebody who knows what they're doing, it's not going to be a cost, it's going to be a wash, and they're going to get you a lot more money for the property.
100%.
Yeah, 100%. So yeah, negotiating deals, especially in something like this, that's something that, I learned the hard way, really, because I feel like I could have done a lot better with the last sale that I did. But again, like, my experience level wasn't there. I just didn't know, what was going on, right?
I understand.
What about creative structure in terms of sales? In like do you come across a lot of like seller financing businesses and
So,
that type of stuff? Or
yeah, it's a great question. So the majority of my clients, I advise them to carry as little seller financing as possible. Here's why. One, it's not because they don't believe in their business, but I'm trying to get them as much cash as possible into to transition. And once that business transfers ownership, that person's going to have full control of that business. They could do well, they could tank it, etc. And so, you don't want to be on the hook for 50% of the purchase price seller financing that thing, and then have that thing go under and you only got half your money, and you don't even have a business that you can get back.
Yeah.
You have to be real careful with that. I'd say the most I've seen in my deals is like 30% max. But really, the majority of the time, I'd say 90% of my deals, it's 10% seller financing. That's all we offer.
Wow. It's incredibly low. 10% seller financing. Yeah, but it does make sense, right? Somebody jumps in and they don't know what they're doing. They're going to break the toy. And then you can't play with the toy anymore. I mean, yeah, it's secured. I mean, most of the time, right? It's secured by the business itself or, whatever, but you can't guarantee they're going to perform or not, like, create a value add business in the process.
When you're talking about 10%, that's usually my risk threshold of like, hey, if this person didn't pay you the extra 150 grand, would you be okay?
Yeah.
Like, yes, that's why I just kind of say, okay, good. This is your bonus. Don't bank on it, but let's do it. Let's tip the ratios for the bank so that we can get this loan through and we'll be fine.
And do you also do purchases or?
Yeah, so it's interesting. So unlike real estate, there's not buy and sell side agents. What I mean by that is each party is responsible for their own fees. So I rarely run into buy side agents. I've been retained probably a dozen times to find a business, like go out, prospect.
Over 10 years, wow, yeah.
Yeah, somebody will say, hey, I want to buy a manufacturing company. I'll say, great, here's my fee. You pay this up front. I'll find you the manufacturing company. I'll help you through the negotiations, etc. But most people, like, for whatever reason, they don't see value in that. I don't know why. Yeah. So you very rarely do see a buy side agent.
Interesting. So if you have, I had a question. I lost it. I went on a tangent in my head, pulling a thread. All right. So it's not as common, right, to be on the buy side, at least from your business model standpoint. Now, if there's always an issue with confidentiality, right? When you're putting a business out there, when you're, kind of releasing the information, it's not like we open a door and we have buyers walk through like, real estate agents are used to doing. How do you guys handle that, that level of privacy when it comes to businesses? You're talking about numbers, you're talking about a selective, group of people, but again, it's a big time investment, right? Going into it from the buyer side. So how do you connect the dots? What do you do there?
Yeah, so confidentiality is usually a pretty big concern. I'd say for like 70% of my clients, they don't want their employees to find out or competitors. Yeah, so they want to keep things pretty tight. So the first thing that we do is all buyers are required to sign a non-disclosure and a non-circumvent clause. And I take this pretty serious. In the clause that we have, or in our contract that we have, it's got $1 million damage clause. What that means is if a buyer reaches out to the company directly, or tries to contact an employee, or tries to contact a vendor without express written permission from the seller,
Mm-hmm.
then they can be sued for up to $1 million. So it's pretty serious.
Got some
We're like, hey,
teeth. Yeah,
not
got some
talk to
teeth.
anybody unless we tell you it's okay.
Yeah.
The second qualifier is I make everybody show me proof of financials. They've got to show me that they have the money. There's no reason for me to send my clients tax returns, P&Ls, balance sheets, the name of the company, all this stuff, if the buyer is not willing to share his financials. And look, occasionally I'll get people that'll kind of put up a fit. They'll be like, I don't want to share that. It's personal. But my response is always, well, you want me to send you the business's financials, all the tax returns, all this stuff, but you're
Those are
not
also personal.
yours. I'm sorry, we're just going to pass.
Yeah.
And it just kind of weeds out the curious from the serious.
Mm-hmm.
I've filled out plenty of non-disclosures. I've got a database with over 5,000 buyers, and there's people in there that have as much as $50 million liquid, and they've shown me. So look, when you're in the game of money, people are not that concerned about saying, yes, I've got some money, here you go.
Yeah.
You know what I mean? It's really not that big of a deal, but we qualify, we qualify them financially. And once they meet those two criteria, then I'll release the package. As far as advertising or teasers or anything like that we're putting out to deal makers, everything's done on the blind, meaning you'd never know. It would say transportation company located in Arizona. That's 3 million in gross, 500 grand in profit, 14 trucks. That's it. Like, it's all it's going to say. And then they have to contact us and fill out those forms before they get any info.
That makes sense. Yeah, absolutely makes perfect sense. It makes me wonder too. I mean, given the fluctuation of the market and economy and everything that's going on right now, where do you see most of the activity happening? I mean, you're looking at business, sales and purchases on a regular basis. Where do you see people kind of leading or leaning into right now?
Okay.
What industry wise?
Yeah, I'm doing a lot in logistics, tons right now, because we've seen a massive spike through the pandemic for trucking, getting delivered at home. Now that everybody's realized that they can just shop from home and it'll get delivered, logistics is up like 50% from where it was in 2019. So the demand for those companies is up. I've got lots of buyers that want them. And then from the sales side, a lot of like long timers that have been in for 15, 20 years, they realize that values are higher than usual. And so it's a good time to exit for them. So I'm doing a lot of stuff in logistics right now.
And transportation is a whole different beast, man. It's you're looking at gas prices when those spike, your margins just drop, not by 1 or 2%, but you're looking at 10% drop sometimes. I remember when I was running through I think it was 2007, 2008, gas prices spiked to about $5 a gallon. In our area. Yeah. I mean, you can imagine how that runs on not a diesel truck, but a gas, just economy, gas. I'm sorry.
Were they semi trucks? What was it?
No. They were Econolines, just big medical transportation or non-emergency medical transportation vehicles. So we had wheelchairs and stretcher vehicles, and but I mean those things were gas haulers, and when that happened, and it happened fairly quick, within a matter of a few weeks, 2-3 weeks, boom, the gas prices spiked, and our profit margins just went real narrow. So it's important to keep an eye out. It's interesting, man. It's like logistics, right? Especially with all the issues that we're having at ports right now with imports and getting all that stuff into the country and then just distributed around the area. So I don't know, it makes me wonder. Awesome. Do you have any other strategies or just advice, that a sound advice that can give somebody who's looking at just a potential sale of their business?
So one, keep really good books, keep solid financials. And what I mean by that is, I run into a lot of people that are not keeping up-to-date QuickBooks. Like, they'll go years without filing tax returns. It's just not really a good idea. You want to be up to date with your financials, and you want to make sure they're as clean as possible. When I say clean, I'm not saying don't write off depreciation, don't write off your owner's salary. Like, of course, put as much as you can, but like, for example, don't go out and buy a boat for $120,000 and then
Write it off as
it as marketing. Like,
yeah.
it gets a little gray, and it's very difficult to explain to a buyer, a lawyer, a CPA, a bank. And you'd be surprised, like, it happens. People are like,
Yeah.
oh yeah, that's like my houseboat. It's like, well, that has nothing to do with the business. Why is it in here? Well, it's a write-off. Okay, but it's going to be difficult to get that allowed, like an allowable add back, and then your valuation is going to go down.
Mm-hmm.
So keep good books, keep clean books, you know?
Yeah. Yeah, no, perfect sense. Makes perfect sense. All right. So if somebody wants to get a hold of you and I don't know, maybe just ask you a few more questions or bring your business they want to sell, what's the best way to get a hold of you?
Yeah, so they can call me directly. I'm happy to do, any of your listeners, if they're curious just to see what their business is worth, happy to do a free appraisal. I normally charge $3,000 for it.
Wow.
Happy to put it out for them. They can call me directly, 866-224-8386, or they can go to our website, which is AmericanBizBrokers.com. So AmericanBizBrokers.com. We've got businesses listed there. All my contact information's there. You can read up on us. We're a national brokerage, and obviously they can reach out direct.
And you guys do all states?
Yeah.
Okay, beautiful. I'll make sure to have the phone number on the show notes. You're probably gonna get hit with those, and then also the link to the website.
Yeah, sounds great.
Yeah, Josh, man, I really like this fire style session that we just had on Q&A for businesses. I think it's very enlightening. I'm taking a good amount of things away from this. There's one question that I'd like to ask before we sign off, and that's it taps back into the entrepreneurial mindset, right, or the journey. If you were walking down the street and you ran into your 17-year-old self, what would you tell that 17-year-old Josh?
That's a great question. I would say don't ever sacrifice your integrity and your morals and your standards for money. There will always be another deal. There will always be another business. The money will always be there. Don't compromise yourself thinking like, oh, if I do this, then I can just make a little bit more or do that. I've had some business partners in the past that didn't really align with me as far as like who I am. And yes, I made money, but there was also heartache through those times. And when I look back on it, it's because I compromised some of my values, thinking, well, these guys can help me make more money. And ever since I've kind of stuck to that, money has never been the issue. I make plenty of money, I'm successful, etc. But I'm happier when I just kind of stick to who I am and I don't deviate from that course.
Wow, man, that's huge. That is huge. Stick to your values, to your morals. I like to think that money is a byproduct, right? When we stand in our truth, money becomes a byproduct of everything that we do. That's awesome. I love it, man. Well, Josh, thank you so much. I appreciate you stopping by and then sharing all these golden nuggets. Guys, if you're listening to the podcast and you're interested in just kind of finding out how to structure a sale of the business, take advantage of this. Go to the show notes and then reach out to Josh and have him, sit down with you and do a breakdown of what your business is truly worth. You're going to be surprised, right? A lot of times we have, again, a swayed notion of, what the valuation of a business is, but have a pro take a look at it. This is something that if you've been in it for a while, it's taken you blood, sweat, and tears to build it up. So if you're exiting the business, you want to make sure you do it the right way. So with that being said, thank you guys for listening. Stay focused. You got this. Let's go.